So today on the Income Flip podcast, I have Frank Rizzo. Frank, thank you so much for joining us, brother. I appreciate it.
Rob, thank you so much for having me. I'm really appreciative to be on the podcast today.
Well, as is customary for us, we love to explore the journey of the entrepreneur. So we kind of understand the thinking of the entrepreneur to discover how you ended up doing what you're doing today, because that journey, there's an evolution of that. And then we get really tactical, right? We get really tactical to give people tools and strategies to kind of, emulate whatever journey you've been on, right? Like, can we give that younger generation some pieces of advice on this journey? Because we got the scars, right, on this journey, and hopefully we can prevent some of the younger generation to not have some of those scars. Although I think getting scars is an important part of the process, right? We can't baby people. They got to learn how to do this themselves, at some point in the game. But let's go back. How long have you been in the business, Frank?
I've been in the real estate space for over 25 years now. Not to date myself, Rob, but over 25 years I've been focused in on real estate.
And I saw that you got your license when you were 19 years old.
So I did. I was home from college, and I knew at that point I had always been an entrepreneur from when I was younger. And I knew I didn't want to work for anybody because I never wanted a ceiling placed on what I could earn. And so I went into a Century 21 office. I went for an interview. They hired me. Apparently I had a heartbeat and was willing to work for nothing. And so they were happy for me to go get my real estate license. And when I did that, at the time, we were still using the book. So if anybody who's old enough to remember what the MLS used to look like, you had a book and you'd have to go into the office to find out what was available. This was pre-Zillow, pre-internet. So it's been quite a transformation in the space.
So you started off at 19, like wet behind your ears, right? Like you really don't, your friends and family members aren't buying real estate. Well, your family members might be, but your friends at 19 certainly are not buying real estate. Like, how did you survive, man? How did you make that happen? Give me the story.
So I think I overcompensated because then I looked like I was 15. So what I did to overcompensate was to really get market knowledge. So I would go visit every listing that was about to expire. I would drive through the neighborhoods. I would I would do all the things that you had to do through hard work to. So when someone came in and asked me a question, I might look like I was young, but my conversation would be elevated to meet the prospect where they were. And I think that helped a lot more. And then having and being able to develop those relationships over the phones with the prospect before they even came in the door. So by the time they met me, they were surprised to see I was 19.
I love it. And so, Frank, let's walk through the evolution, because from reading, you were licensed in 19, and then you started your own brokerage when you were 28, right? Or you got your brokerage license when you were 28. Did you venture off on your own, right, from Century 21, open up your own shingle, or what did you do?
Yeah, I had a couple of moves before that, but at that point, I realized that my forte was really in I was an investment broker. I liked putting deals together. I liked putting together maybe some challenging deals. I wasn't your typical, residential list your house and buy your second house. I was more of trying to find unique investment opportunities to bring to a specific segment of the market. And so when I ventured off, my focus was to build a brand of finding unique investment opportunities that the average investor wouldn't find by just looking at what might be available in the marketplace at that time.
Frank, it's so interesting because obviously we're cut from the same cloth. That is me. That was us, right? But we were like unique ducks in a brokerage, right? Like, you might have 200 people in that brokerage and maybe one person looks and smells like you. Like, where did that investment mind come from? Where did you decide to say, you know what, my niche is going to be really in the investment community? How did that happen?
That's a great question, and I just think that that's probably something I had innately even before I started the brokerage. So from a young age, where we were always trying to be entrepreneurial, whether it was starting a bit, starting a distribution company, whether it was, a whole host of other businesses that I might have had along the way, with the idea of looking for ways to create value, right? And looking at each situation as, is this undervalued? What could I do, or what would I do to create that, almost magically create that value in that opportunity, and then who would want to participate with me? And I guess necessity is the mother of all invention, and obviously realizing that if I wanted to live a certain life, that I would have to create that in a way. It forced you to think creatively in how to generate wealth and create the type of income that I wanted to generate to live the type of life that I envisioned living.
When you started your brokerage, was that the idea that you were going to be looking for unique alternative investments, or you would be bringing investments to the marketplace, to builders, developers, investors? Was that the thesis of the brokerage?
Correct. So when in 2009, if you remember, you're in the midst of the Great Recession, we had focused a lot on that at that point on non-performing loans. So where we would buy, basically loans at a discount to par value, loans that were not performing, with investor groups, and look at ways where we could work, either cash for keys or getting out of that foreclosure process, working with residents or homeowners that maybe have fallen on some hard times, where they could pivot out to start something new, and we can find some value in that. And so we really had a focus on distressed and mispriced assets in the marketplace at that time.
So interesting, because that was really like my genesis, but we did a lot of short sales, right? That was kind of my introduction to just like helping people get out of difficult situations. And then I started buying in the depths of 2008 assets with a partner, right? I was kind of like the realtor, investor-minded person, finding the deals, putting together the contractors, putting the tenants into play. Like we were burring out of those projects, and we were buying, just one at a time, like one a month, right? We still own those assets today. It's like one of the smartest things I did. But it sounded like you were pooling investors together, or you were buying in tranches. Is that correct?
Correct. We would look to buy a couple of these notes at a time. So and if you were doing the same thing, if you remember the List Pendens report, you'd always find those like non-bank banks that would own those, so if it wasn't JP Morgan, it wasn't Wells Fargo, it wasn't one of the big companies that was owning the notes, you'd be able to find some of those smaller non-bank entities, and then I would just engage in building a relationship with them and try to see what they had in my area and see which one of their distressed notes they didn't want to be in. I'm based in Staten Island, New York. One of the advantages of that is most people or funds or whoever was invested in the city at that point, they didn't want to be in Staten Island. It was like they almost got something in as a tailwind. So if they had a Staten Island asset, they wanted almost to shed it. And my base being I had Staten Island investors and Staten Island, network that I had built out, it was very easy to say, well, you really want to be in Brooklyn, you really want to be in Queens, you want to be in the Bronx where there's higher density, I'll take this off your hands. And so we were able to build a relationship and build a business off of that during that time.
That's awesome. Yeah, that's awesome. So walk me through, what does your business look like today? Because that was crazy enough, right? 2008, you start thinking about how long ago that was, right? Like there's been an evolution, I'm sure, of your business, your model, your personal growth, your goals, right? So walk me through that growth, that thinking, and what does your business look like today?
So over the last decade, we've been in the manufactured housing space. And right now, my business is we own and operate 16 communities in the Southeast where we're a mobile home park operator. We syndicate out mobile home park opportunities. We just closed our first closed-end fund in the manufactured housing space. And our focus is solely in finding undervalued manufactured housing communities or trailer parks, completing our turnaround system where we can force appreciation, we can elevate the standards, and then convert them into affordable housing communities throughout the country. So that is our focus and our intent.
You know, it's interesting just listening to you. I could see the strategic thinking, right? Like it's always kind of follow either the demographics, the trends, flow with the river in 2008, 2009, 2010, right? Like the ones that focused on investments or understood how to find the arbitrage there did well, right? The agents that learned how to pivot. Right now, obviously, affordable housing is a real big problem, like a massive problem. And it sounds like you're filling a need. You've put yourself in the path of that opportunity. When did you make that pivot? When did you start saying we're going to start going after this manufactured housing and serving that community?
I was involved in my first manufactured housing community in 2013, and it happened almost by accident. I was working with a family as they were relocating down south. I was helping them through some of the challenges of that time where they had multiple multifamily buildings, but their collection loss was at 45%, and they were on the verge of maybe losing some assets, and we were restructuring some debt. We were working with them to replace that income through a 1031, and they wanted us to find something to replace that income for them where they were going to be located. And as I was going through the thesis of, what you should be investing in, and having come from a multifamily kind of retail environment, I came across these mobile home parks, and I was like, I really think you should buy one of these. And the father, who was a first generation immigrant, salt of the earth, entrepreneurial mindset, said he would only do that deal if I stayed in it with him. So we stayed in the deal. And then I realized that if you want to make an impact, and I think everybody wants to invest or have their work have an impact beyond just economic, right? But this investment ticked all the boxes for me. I mean, we had the opportunity there to not only do well, but do well for the people that we were serving. And in changing those communities over, we were really impacting people's lives. And for me, I was like, well, this is something I really wanted to do a deeper dive into. And I ended up getting more involved from there.
Frank, what do you still have your brokerage today? Just out of curiosity.
Yeah, I would never give up my license just because it's, you have that license and it's worthwhile to do it, but we're not focused on, obviously we have referrals and people that will do, but we're not focused on building out that brokerage platform.
Got it. It's not like you have a bunch of agents and you're managing a team of 100 agents or anything like that.
No, we're building out we built out a team of on-site people, and we have a team that we have operationally that handles our manufactured housing communities, and that's really our focus and drive.
Got it. That's where you've kind of evolved to. Cool. So when you say the Southeast, what parts of the Southeast? So
we're currently in North Carolina. We're in South Carolina, Georgia, and Alabama.
Okay. What part of North Carolina?
So we're in Laurinburg and we're in Jacksonville.
Okay.
So, Laurinburg is a little south of Fayetteville, kind of centrally located in North Carolina, and Jacksonville is closer to the coast, right by Camp Lejeune.
Okay. Yeah, we just opened an office in Raleigh, and I'm actually in St. Pete Florida, launching another office. And so, this is a space that we've always kind of talked about and been interested in. So I've got a lot of questions to ask you. What are the economics of owning something like this, right? Why do you like this particular space?
Well, for us, Rob, it's community development 101. We realized that, we had a specific skill set that worked really well. And when we first got involved here, I mean, you're still talking about an industry that's very mom and pop, right? Or was very mom and pop at that point. I mean, there's been a tremendous amount of capital that's been poured in post-COVID, but at the time we were looking at it, 80% of it was dominated by mom and pop owner operators. So there was a lot of inefficiencies in those systems where you would see communities where people were very sticky, right? They own a home, they want to stay on average 17 and a half years, industry standards. If they own the home, they'll stay on the land. So that makes a compelling narrative to be there. But if you can run these communities correctly, and it almost becomes like a franchise effect, right? Where if you have the right systems in place, it's a very duplicatable process, which can take you to a lot of different markets because the process is all the same. And so for us, when you're looking to scale and grow a business, and I equate a lot of what we do to almost like a fast food franchise, right? It's the operating system that we have that we know if we can come into this target market with this demographics and plug in our operating system, we can have kind of expectations of where that return would be for us over time. So that kind of has been the real plug as to why we've did a deeper dive, and just over time we've worked on refining that system that we utilize to find opportunities to elevate those communities and to force that appreciation to convert it to cash flow.
I love it. What then are you looking for when because there's going to be people out, in the ether listening to this, and they potentially could even bring you deals in the Southeast, right? Sure. What's your buy box look like? How many mobile homes? What does your average avatar seller look like? If I was to find something in St. Pete, if you ever invested in St. Pete, like what would that look like, right?
So we at this point we have like enough of a data set to know that what we like and what we work best at and what doesn't, right? So if we're going into a new market, you need scale, right? Because this is a business of nickels and dimes, and to operate this on a smaller level, like a 20-lot park, wouldn't work in a brand new market because you can never get that economy of scale there to drive down costs. So we'll look for communities that are typically 50 units or above. We're agnostic as it comes to utilities. Like at this point, we're comfortable with wells, we're comfortable with septic. Obviously we'd like to have city water, city sewer. We realize that that's not always the case. So we're open to that. We're open to doing the hard work. I think we've kind of built out a niche for us where we're kind of like the trailer park turnaround specialists. Like we will take on jobs that either a heavy infill project, which means maybe there's 80 pads, but 50 of them are vacant, right? And so we've got to fill in 50. So there's an infill component to it. We'll take on some tenant or legacy issues. Maybe you have a bad resident mix, right? Maybe you have, a lot of trailer parks have a stigma to them. So we'll come in and we'll work on cleaning them up and getting to them where they're stabilized. I'll give you a perfect example, Rob. We acquired a community that was 89 lots in Southeast Georgia, right? Good market, strong market, but park had fallen into foreclosure. We bought it from the bank. There was 26, 27 residents there. One of them was a drug dealer with tattoos on half of his face, sitting in front of the park, selling to 5 homes in the park, right? This was his business. We came in, we had to get rid of a lot of those residents. But by the time we were done getting rid of those residents, making the improvement to the community, doing the roads, getting rid of the hazardous homes, cleaning up any debris, removing trees that might be a hazard, and then bringing in new homes, we left with 70 residents in a community that didn't have a drug dealer, but would have ice cream trucks drive around with kids following it, right?
That's awesome. That's the impact piece.
That's the impact piece. And quite frankly, that's the items, Rob, that keep me going, because when you see those changes, and I actually drove by that community this week I was just traveling. We sold the community, did well, but the community still held up to that standard, and you could still see things happening there, and that to me is very rewarding. So for us, maybe a mom and pop seller who's kind of phased out, timed out. We've seen some of our buyers recently have been people who got into the space, didn't realize how much work really is required in it, and then maybe they realize that, hey, I'm not solely focused on this, and I need to pivot out, and we can provide an exit for them. So those are typically where our two sellers come in from, like mom and pop, or maybe somebody who got into the space, a syndicator who got into the space and realized they don't have the platform set up for it.
Got it. So let's talk about, I assume what you did was you started a fund, you raised capital for this, is that right? And your thesis is Southeast projects that are 50 with pads of 50 or larger, right? What do you pay your investors, just out of curiosity?
So, our investors have a pref, right? So depending on their investment amount, we'll have it scaled to different ways. And then we have some performance hurdles that if we can hit over and above that, obviously we're going to do better, right? So the pref might fall anywhere from 7 to 10%, but then over and above that, we'll have some performance hurdles. And we always feel like the better that our investors do, the better we do, right? And that aligns everyone's interests. And quite frankly, we find that your investors want to see you do well. They want to see you be successful, right? And I always tell everybody, I want to be your partner, but for me to do that, I know that there's certain things I have to do to achieve that level. And so there's certain hurdles that we have to hit. So we've been fortunate that, we have a track record where we could show, where we've had multiple exits of 2x or better, and our average returns for investors on those, and I'll say past performance doesn't indicate future benefits, but typically our investors have averaged a 20% or better return on exit.
That's awesome. And when did you start the fund? Where do you want to take this business? Tell me a little bit about the vision.
Rob, we've worked on both a fund and syndication model and JVs. So, we believe there's obviously a pathway in this space for operators who are dedicated to improving communities. I mean, you hit the nail on the head before. And listen, you're in multiple markets. I'm sure you could agree, like everywhere there's an affordability crisis, right? I mean, you don't go to a market in the United States today where you don't have people having this challenge. It's just been nationwide.
It's everywhere.
So we're providing the most affordable housing stock, and we're providing people a pathway to home ownership, right? And in doing so, you've seen a noticeable improvement in those communities. So for us, it's a very rewarding investment beyond just the metrics, which are great. It's just a very rewarding investment for us. So being that there's so few solely focused operators in the space, we want to, we believe there's a runway for us to grow the platform to 10,000 pads or better, right? So that's what our focus is. We typically look at the communities that we're buying as failing businesses. We're taking over a failing business that happens to own real estate. We're repositioning that asset, getting it to where we are elevating that standard, the culture, changing the thoughts on that community, inside the community and inside the larger community, changing the narrative on what a trailer park could be, forcing that appreciation, and then converting that into cash flow and liquidity events.
What about RV parks, Frank?
So interestingly enough, Rob, we have a couple of hybrid parks now. For the first probably 8 years, we stayed away from them. We looked at it as being a separate business model. We have ventured into them now, and we just launched our first RV park 2 weeks ago. inside a mobile home park. So we're starting to see that now, and we're working through some of what we need to work through on that. But we're really excited to see what that could be, and we think that'll be a nice add-on because there's some familiarity in that space, some of that, and some of it kind of rolls over, and we think that we could expand out our platform that way as well.
It's interesting to see how people have created different models throughout the country, or like these things have existed a while, but like really started to systematize them in order to create business plans around them, right? So whether it's RV parks or mobile home parks or co-living or house hacking or ADU building, like people building ADUs on lots, right? All of it is to fix this affordability crisis that we have in the United States, right? And so, so it's really interesting. I'm blanking on his name now. The Grave Dancer. You know who I'm talking about. He wrote the book. Am I Being Too Subtle? Sam Zell. Sam Zell, right? Sam Zell. Like, Sam Zell saw this early, right? He started going in and buying this, and people on Wall Street were making fun of him, right? Because he was really a commercial guy, right? Who then saw an opportunity in this space a decade ago, 15 years ago, and then just like
longer.
20, and just started buying everything, right? I mean, I guess he passed away, what, like 4 years ago, 5 years ago, somewhere around there. Yeah. He saw it, and he saw that. He saw a fragmented market, lots of mom and pops, and he consolidated them. Right, I guess just like the Rockefellers, consolidated like oil refineries back in the day or something. Yeah, fascinating. So you want to continue down building communities, right? Providing housing to people that need it most, creating impact there. Will you ever venture out of the Southeast? Does your research tell you to go, Midwest, or does it tell you to go in other parts, or are you just going to stay in the Southeast?
We've looked at expanding out to the Midwest, obviously moving out to Texas. I mean, for us, we want to make sure that when we make that move into another market, you have to make it with scale, with the right operations in place. We've always taken our growth as kind of like a spoke and hub way to do that, where if we get into a market or region, we want to expand off of that. We realize there's a certain radius where our team can work and be efficient, and we can bring down cost to do that. And for us to enter into a new market, we want to make sure that there's a big enough portfolio where we can effectuate the business plan and drive efficiencies inside of that market. So that's something that's on the table for us. We're obviously looking at different opportunities, but as you know, Rob, over the last 24 months with elevated interest rates, there has been a little bit of a delta between where buyers want to be and where sellers want to be. So, we don't want to. We've never done a deal just to do a deal. Like, we want to make sure that that we can effectuate our business plan on getting that property right. So we might not buy the most from, say, other players in the space, but we love the assets that we end up buying, right? Because we know that they will fit in terms of what we need to do to make them work for us and for our partners.
Frank, just speaking to you, because I talk to a lot of people, right? I could tell you're an operator. You speak the language of an operator. I could see your creative efficiency mind just in your language, right? Did you go to school for this? Were you wired like this? What training have you taken for this? Right. Help me understand that.
Rob, I think you said it best earlier, was you end up with a lot of scars, right? You do a lot of things and you get scars along the way. I think I've been fortunate and blessed with having some good people around me that I can go to, and having those mentors for certain things where I can pick people's brains and figure out how to make things work or how to make things better. You might not take everything, you always take the best and leave the rest. So that's been a key component for it. I think that we as a team, we've built out some really good people. My partner who co-founded Stone Capital with me, he's been tremendous. I mean, I can't begin to tell you, Rob, how many car rides we've taken together just going over business planning, game planning, and the people that we've brought on since then. I mean, I think we have a really cohesive team, and that allows for that trust to go back and forth and say, okay, this would work, this wouldn't work, and I just think I like to believe I'm kind of a real estate, I don't want to say junkie, but like I read everything I can. I listen to all the podcasts. I try to pick people's brains as much as I possibly can to figure out what works in our system. And then constantly monitoring and making sure that we have some check marks along the way. So that's really been super key for us.
I think anybody listening to this, like one takeaway I'm getting from you, Frank, and I just want to kind of like double click on it, is being a real estate entrepreneur, because that's what we are. It's constant iteration, right? You might enter in with the right idea or thesis, but for whatever reason, it may not be working like the way you want it to work. And so you've got to kind of iterate quickly, find different ways to extract the value, pivot, right? Until you can make it work. And sometimes it's just talking to people that have been down that road before, so they could be like, hey, no, I've tried that. Like, you might want to consider this avenue, right? I had a conversation with a guy today, this morning. He opened up, different industry, but very similar. He opened up 125 insurance brokerages around the country. So he was a broker who then opened 125 offices, right? And the conversation was, well, how did he, and he did it in 8 years. How did he do it so quickly? Like, what was his mechanism? What was his financial model associated with that? And it was fascinating because he really tapped into going offshore, building a large recruiting team, having a massive funnel of recruits constantly, 10 to 20 recruits they were going to vet through and open offices with. And so while he came from a different industry, he gave me some different ideas about how to build out what we're building in our business. Which kind of speaks to the point that you talked about, like binding the mentors around you that, whether it's in your industry or outside of the industry, that can help you iterate your business to improve it, right? And it sounds like you've done that.
And that's like the power of what you're doing, because when you put like-minded people together, they come up with solutions that you might not have thought of.
Yeah, for sure. Well, Frank, if people want to get a hold of you, right, what's the best way for them to reach out to you?
So you can go to our website, trailerparkturnaround.com.
That's a good name.
So you'll see, we actually have a video series through there. You can see us on YouTube at Trailer Park Turnaround, and you can actually watch what we do on site, how we turn these communities around from beginning to end. But if you go to trailerparkturnaround.com, you could send us a message. Be happy to answer any questions you have. And we have some, and if you're looking to get into the mobile home park space, we have we have an ebook that you can grab to help you find your first, maybe even your 50th deal. So something that we put together and we'd be happy to share with your audience.
Frank, what a great name. That sounds like, without even knowing about it, it sounds like a fun video series. Like, I could see a whole TV series being rolled out on that. It's like,
think of like Bar Rescue, but for trailer parks.
Yeah, I totally get it. The stuff you guys run into, I'm sure, is like crazy.
And there's a million stories that we have that happened before we even started putting everything to video, that people would, when we come back and tell them, they were just like, you should have videoed this. Like, it made for great entertainment. So we're trying to figure out how we can do it, like with graphic designs, put these stories out there, because they were really, I mean, it is such a, it keeps it the day-to-day interesting, that's for sure.
Okay, last question, because you are a researcher and operator. What is your prediction? Because I'm going to ask you to reach into your crystal ball right now, look into your crystal ball. But there's a lot of change happening in the market right now, right? There's a lot of fear in the market. We've got the stuff with tariffs. We've got, right, our monetary policy? Like I'm just curious, how is Frank Rizzo positioning himself over the next 16, 12, 24 months based on what he's seeing in the market? Or is it business as usual, Rob? Like,
So I think the one constant in business is that it does change. Certain things that we've looked at and realizations that have come is that, the price increases on on the work that you were doing, on the labor cost. I mean, I think that's there, right? And you've got to underwrite for that and expect that. I think for us, what we've started to do, I mean, everybody has a perfect world budget, and then you got to have a variance in there. I think that variance over the last 36 months, you've just increased to understand that things can happen that you don't expect, like, for instance, the tariffs. For us, we were planning on bringing in new homes. We might do that earlier because the price of those homes may go up. So you have to be able to, look at those things and see how they impact your business to make those pivots, as you correctly said. But one of the things that I think help us in this environment is that we specialize in just manufactured housing. So it's not that, hey, we're doing manufactured housing and then tomorrow we're going to go do industrial, and then so when you're that nuanced, I think in any space, you could see those changes coming and those impacts to your business a lot better than if you're just kind of scratching the surface in a lot of different areas. So what we realized early on, to be successful in the manufactured housing space, is we had to solely focus on it. So we don't do anything else but manufactured housing. And so this is where we want to keep our core competency. So I think our space in particular, there's a lot of capital pouring in. There is a finite number of mobile home parks nationwide. I mean, there's 43,000, 44,000. They're really not making any more of them. That capital is going to keep pouring in because people realize that there's a high yielding asset there. So I think over time, you're going to see a lot of those mom and pops phase out. And this industry is going to become more institutionalized, more homogenized in terms of operational standards and expectations of what really community living is. So I think we're excited because we think this is an exciting time to be part of it, and we've seen a lot of changes here, and it's even in the last decade where how this industry has come. The next 5 years are going to be completely different. So we're excited to be part of it, Rob.
Frank, thank you for sharing your wisdom today on the Income Flip podcast. This has been awesome. I know I've learned a lot, and I know our audience, anybody listening in, is going to feel the same way. So thank you, Frank. Appreciate it.
Thank you, Rob. Thanks for having us.